Afternoon, good evening. I hope you guys are having a good trading day and had a good weekend. Hey, Duncan, Chad, Laura, great to see y'all. Happy Monday, guys. So, starting with SPX this morning, we did technically open a little lower than the close that we had on Friday. Bounced up, ran into 4180. That ended up holding as resistance, pulled right back into support. So, for those of you intraday trading, this could have certainly made a spot to at least scalp for a trade, maybe take a quick win on bouncing back up to 4180. Of course, we are starting to break a little bit higher. So all of this, of course, is maintaining more the bullish tendency that it had into the end of last week. And on the daily chart, as we can see here, that bullish tendency is continuing with the 10 above the 30, both above the 100. We have Bollinger Band starting to flare open. We are getting very close to 4,200 as a potential psychological level, as well as where weekly resistance is. So let's pull that up here for a second. And so this will be the interesting thing to watch for this week is whether or not do we actually get a move to the upside with potentially the Fed news being that catalyst to break this weekly resistance, to have the weekly squeeze fire to the upside. It would certainly match with the lower indicators here with momentum building up and with the bullish signal in the compound breakout tool. And certainly that daily chart that we just walked through with how the Bollinger Bands are opening up, right? All of that looks good to the upside. But we have also seen before on this weekly time frame how we have stalled right at this level in the past, and it's caused some sort of pullback. Sometimes that pullback has brought us down to, hey, Run, good to see you. Sometimes that pullback has brought us down to 3,800. So for this year in particular, we've been trading in between 3,800 as our main support level and basically 4,200 as resistance. So we've just been chopping in this 400-point range. And so if the Fed does say something that the market reacts positively to, because remember, from a trader's perspective, it doesn't really matter what the Fed says, right? It doesn't matter what Powell says if there's a rate hike or rate cut. All that really matters from a trading perspective is how the market reacts to whatever he says. And so if the market reacts positively, if it likes what it hears, then that's a good catalyst to maybe finally break above weekly resistance and get us back into a bullish trend again, right? That could make a good buying opportunity. At the same time, though, if the market reacts negatively to what the Fed says, well, then that could be the perfect catalyst for holding resistance and us moving back to the downside. Hey, Dakuto, good to see you. Hope you're having a good morning. So, because of that, what I'm kind of anticipating right now, at least going into Wednesday, is going back to those slightly smaller ranges. Now, they started to pick up last week, which was great to see, right? We actually had over 50-point ranges, which when we talk about last year, of course, seems like nothing because we had 100-point daily ranges as like the norm. But this year, our ranges have certainly been on the smaller side of things. And that's sometimes a sign that volatility's leaving the market, right? And we've seen that with the overall chop that we've had this year. But more recently, we actually had some good, healthy daily ranges that's helped with not only the pullback down into the 30 on the daily, but the bounce up that we're getting. But I'm more inclined to think that today, tomorrow, and certainly on Wednesday going into the news, we might see a bit more of chop, right? We might go back to those smaller daily ranges. Doesn't mean we can't go up and test 4,200. We also have a gap here to fill at 42,1870, which could certainly be a target to the upside as well. But overall, right, I think we'll kind of chop a bit more into that news and into that uncertainty. And then, of course, right after the Fed announcement on Thursday is Apple earnings, which Apple, being a bigger component of the market itself, should also see a little bit of a reaction. And whether or not it's going to be a big enough reaction to maybe turn whatever perspective the Fed said the day prior around, or if it goes along the same way, right? Maybe add some strength to that move. We'll certainly come to find out this week. And so for myself, I'm being a little bit more lighter on capital going into the Fed news. I'm being mindful, looking more for intraday setups rather than any sort of swing setups prior to the announcement. And if I do find some swing setups that I really want to jump into, I'm looking to keep the account a little bit more balanced, right? Because even though I love this bullish intraday and daily perspective, that weekly resistance has just proven itself one too many times. And so we need to be mindful of it, and so by having the account a little bit more even on bullish and bearish trades, the ideal situation is the ones that aren't working out end up being covered by the ones that are, based off whatever bull or bear move happens around the Fed news. And ideally, what I would personally love to see is the market to start getting some sort of trend move again, right? To get us out of this kind of chop that we are in for most of April and get us going again, whether it's in a bullish trend or a bearish trend. I don't really care as long as it's an overall trend. And so that's what I'm kind of waiting for going into the announcement. Of course, for those of you who don't know, once the announcement happens on Fed Day, there are usually a few characteristics that day to be mindful of. So certainly jot this down if you're not aware of it. The first thing is, starting at the open, you usually identify some sort of consolidating range a little bit earlier in the market than you typically do on a normal trading day, right? So it's not uncommon, for example, during the lunch hour to chop during that kind of lunchtime time frame as the hedge funds leave to take their lunches, and then see the market pick back up going into the close. Well, on Fed Day, that usually shifts gears and happens a little bit earlier, sometimes even before Europe closes, where we immediately start to kind of identify the high and low for the first part of the day. And we just start consolidating in that range going into the news because of that uncertainty around how the market could react. And then once the news initially comes out, right, whether or not they're doing a rate hike or how much they're cutting, right, whatever that announcement is, it immediately comes out at 1 p.m. Central. And so the market will usually get some sort of spike. It's not uncommon to see it spike in both directions with the algos. So you'll see it spike up, you'll see it spike down, and then it kind of trends for a little bit until 1:30, which is when Powell speaks. And whenever Powell or whoever is in charge of the Fed opens their mouth, that is usually another market mover. And at that point, once again, it's not uncommon to get those volatile instant moves around that announcement. But once he starts talking, especially once he starts answering questions, then usually the market kind of picks a trend and goes with it. Now, in a more bullish market environment, sometimes what happens actually is that we go right back after he's done talking into that consolidated range that we were in this morning, and it's more a non event. But I wouldn't anticipate that this time because it seems like there are a lot of eyes watching on what the Fed could be hinting at with either more rate hikes, or there is even some talk about some rate cuts coming later in the year. And so I think all eyes will be on not only what happens, of course, this time, but also what happens in the update, right? What the notes are, what the other feds are saying, what they're anticipating for later in the year. And so depending on that, I would imagine we either start to get that bullish trend move to the upside where we start working at breaking those weekly resistance levels, or it's the catalyst for a stronger pullback. And then once that trend move starts to happen, we usually trend going into the close of the day, which can make for a great end of day pin trade. So that will certainly be something I'm going to keep an eye out for tomorrow and look at maybe implementing in the $500 challenge this week. So with that being said, the $500 challenge have it didn't take any action last week. Um, Partly because we had quite a few earnings announcements. And though I wouldn't have minded trading earnings, right? It just is a little bit rich on capital for the strategies that I like to look at for the challenge account. Usually, depending on what symbol I'm looking at and the spread width, it can cost, around $2 to $3. And that's a good chunk of the remaining capital of the account that I didn't want to put out there an all-in-one trade idea. Now, for those of you in the mastery or for those of you over at Simpler who did take some of those trade ideas, they did work out quite nicely on things like Microsoft last week. What else had that big move last week that I'm thinking of? Quite a few though. Can't remember what else it was off the top of my head. Tesla, maybe. Tesla, I know we took in the mastery and that one worked out fine. But there are quite a few that had those volatile moves, they had those volatile jumps. And they worked out pretty well for the strategy overall, but like I said, it was just a little bit too much capital risk compared to what I wanted to put out there. So currently, the only trade that we hold is still our long quarterly SPX trade. And for those of you who have been following along with the challenge for a while now, y'all know this is based off a longer term quarterly signal that is looking for potential selling to happen this quarter. And if it does happen, right, then we're already set up for that to occur. We have this really nice trade on. It's placed by the lows of last year. So if sell in May and go away does end up happening, potentially off the catalyst of Fed and Apple earnings, then of course we're good to go for it. The line in the sand for this quarterly signal for me to determine whether or not it's actually going to follow through like it has every other time in the past, or if this is the first time where it doesn't follow through, which is always a possibility with the market. That line in the sand is the weekly resistance between 4,200 and the ATR trailing stop, which last I checked was at 4,260. Yeah, still is. So 4,260 is kind of the top end range of that line in the sand. If the Fed news, right, if that catalyst really starts to break us above weekly resistance, then that is where I will look to protect capital. Now, I may hold the challenge trade just because I'm in it for $1.30. We're already technically down $1 on it, so there's only 30 cents of value. So I can't imagine there's going to be much more value on that trade in general if we do get the bounce up and break. But the other reason why I want to hold it is because if it happens to be like what we saw in August last year, where we technically broke resistance, got a little bit higher, basically took out all the stops on people who were short, and then it reverses back down. Well, then I like the idea of still having some sort of trade out there in case that quarterly signal is just a little late in coming in, but still happens to come in and drop the market off by the end of June. But for some other trades that I hold, like in the mastery account or in my main account, that is where I'll start to look at protecting capital and walking back on some of those trade ideas. And this is why, of course, it is so important to always, no matter what kind of market, no matter how good a signal looks, always be mindful of your risk capital, guys. And that's what I really try and teach you on the $500 challenge is you don't have to put a whole bunch of money into one trade idea for your account to grow, right? You put it up between multiple trade ideas, really set yourself up for some nice risk versus reward strategies, especially on option style trading, and then have that benefit your account overall and seeing it grow. And that's what we were able to do last year. And so we're going to take a shot at doing it again this year. Um, but once again, even if we do lose on this trade, we didn't risk the full account in order to see that happen, right? We risked just a portion of it, and we have plenty of capital still in reserve to be able to jump into new trade ideas. But unless it's an end of day pin trade off the Fed, I am probably going to wait until after that announcement, maybe even till after Apple to start picking up swing trade ideas again. Even the short dated ones, like for the challenge account, because of that uncertainty about how the news could go and the levels that we're trading at, right? We are so close to that possibility of breaking resistance, but we also know how this resistance level has acted since last year and how it could be the catalyst for us to turn back down. So until then, right, anticipate chop, maybe anticipate those smaller ranges. Look how we barely got above the high this morning and we're already pulling back down. So this is what I'd be looking at probably for today into tomorrow is just chop, a slow grind up or down, but overall consolidation on that daily chart going into the news. And that news, right, could end up being the catalyst for sell in May to go away to actually come through, right? And we want to start looking at bearish trades again, or certainly if you're long-term bullish and you have shares and things like that, covered calls are a good way to participate in that short side while still holding your shares longer term. Um, but otherwise, if it's not the case, right, then sell in May and go away may not be a factor for this year because of all the selling that we had last year. And it could be actually another buying opportunity to try and play to the upside, especially due to all the chop that we basically had last month in general. So, if there are any questions, I'd be happy to answer them because we do still have a little bit of time left here before I need to sign off. But otherwise, that is what I'm anticipating a bit more of for this week and a few things to be mindful of. Let's go back to the daily chart. Is SPX is one of the stronger of the indexes, right? NDX as well has done a pretty good job of holding up in this market. Unlike SPX this year, NDX has done a really good job of maintaining its 100 period simple. So we didn't have any sort of break back here when SPX did. And instead, we kept the overall bullish trend. So this is another one to keep an eye out for if the market does really start to pop. We could finally kind of break above this price resistance level that we're stalling at and keep with the bullish trend to the upside. Certainly, our lower indicators are turning a little bit more bullish. So that's another symbol to kind of consider to play higher. Let's take a look at the weekly chart really quickly. So, also a similar battle happening with NDX where we have the 100 period simple as weekly resistance, and that level is at 13,446. So right by 13,450, kind of that psychological level. Once again, if Powell, right, if the Fed, if Apple can really help and break above that level, that could be our catalyst finally to get things moving to the upside. But of course, if the market reacts negatively whatsoever to that news, could also be just once again us holding resistance. And it's a good short opportunity for that sell in May and go away entry to kind of play that back down, whether it's just down into support levels or whether it's back down to the lows that we had last year. One symbol to consider maybe shorting if we do end up getting that move lower in regards to indexes would be IWM. When we pull up IWM here, it is, I would argue, the weakest out of all the indexes because unlike SPX, right, when it broke below its 100 period simple earlier this year, we have not been able to break back above it. So even from a daily perspective, this is still holding as resistance. And arguably the trend is a little bit more bearish, right? Unlike SPX and NDX, where that momentum is building above the zero line, where there's room to move higher, IWM and in turn RUT, right, have both seen it where momentum has dropped below the zero line. So they're adding a little bit of bearish weight actually here to the downside. Now we do have a bullish pullback signal, so that could certainly help the bulls on the compound breakout tool. We have this squeeze. But you can see how we've been holding resistance, how if we end up holding and start to drop back down this week, what's going to happen is this 10 period simple, which is this short dash line, is going to cross below the 30 period simple, which is this longer dash line, and start to go into a bearish trend. And that, of course, in turn could bring us right back down to this recent price support level, or certainly bring us back down potentially to the lows once again that we had of last year. So I'm very curious to see what's going to happen. I feel like overall, since we've been in the chop for this year, we've been kind of waiting for those catalysts to kind of move the market. We watched CPI, but CPI has not been as volatile of a news event as we saw last year. And so we couldn't really get that volatility to pick us up going into a stronger trend move. Even the Fed news earlier this year, right? The Fed minutes had a little bit of volatility, had those wider daily ranges compared to what we've seen for the majority of this year. But even then, it couldn't really pick us up into a strong trending move. We've still stayed trapped basically in that consolidation on SPX. And so I'm very curious to see if this Fed event will actually be a catalyst for a bigger move because of not only so many people keeping their eyes out to see because of the bank situation and everything else, if this is actually going to be the last kind of rate hike or if they're not going to be as dramatic. Or, of course, I think there's even some people believing that we'll get a rate cut later in the year. And so the market's kind of keeping an eye on that to see what narrative actually looks like it's going to play out versus, the levels that we have here. And so I'm curious to see if that actually is finally the catalyst to get us going or if it's going to be a non-event, which is also a possibility. And brings me back to kind of not only remind you guys, but also to remind myself that as much as I really want to see some sort of trend move happen, we could find ourselves actually stuck in a situation like we saw in 2015 and 2016. And for those of you who remember trading those 2 years, I do, it was annoying, right? For people who like to find trend moves, because we didn't really have much of a trend move. We had some pullbacks here and there for like a month or two that worked out quite nicely, for a bit more of a trending market, if you will. But otherwise, the majority of those years, we were flat and we chopped. And overall, that consolidation still allowed momentum to get the reset it was looking for, still allowed the squeeze to build up energy before we then had our next bullish run to the upside. So as much as I would like to see a bit more of a trending move off of this level, whether it's a bounce back up, right, towards the all-time highs, or whether it's a move back down to test the lows of last year, we may not get it. We may still find ourselves just stuck in the 400 points of chop that we've been in, right? And that's all that could end up happening here is consolidation, because when we look at this monthly view, it does look pretty similar to what we saw back in 2015, 2016, which is we have flat Bollinger Bands. The 10 has crossed back below the 30, so that technically has it go back into a consolidating formation. Momentum, which was at exhaustion, right? We knew that. For those of you who've been following along with me, we've been tracking that exhaustion since actually October of last year. So the pullback over, or not last year, but October of 2021. So we know the pullback that we had last year wasn't that surprising because we were starting to reach that monthly exhaustion level. But that's already started to reset. Now what's happening is the momentum bars are pretty flat. So that's in line with consolidation until they to either pick back up to the upside or continue that strength lower. The compound breakout tool, until recently, right? Until actually last month into this month, has been pretty choppy. We have had back to back either valid signals or just back to back red and green boxes print. And when that happens, that's an overall sign of consolidation. Now, I do like that it's attempting a bullish signal, right? We had the bullish signal to technically print last month, and it's remaining valid currently this month, but it's also the first day of the month. And so if earlier in the month, aka this week, off the catalyst of the Fed, we start to get selling, it's not going to take much for this quote unquote bullish signal that we printed last month to immediately cancel out, just like we saw back here and just like we saw back here, to go back into a more consolidating or potentially even a pullback bearish signal if we do really start to get that selling going. So as much as I'd like that trend view to happen, I just keep reminding myself that it could also be where we're stuck in chop overall. And for those of you who follow David's work, David is one of the traders here at Simpler Trading. He does a lot of Elliott wave analysis. And last time I caught one of his sessions, he had mentioned something along the lines of, for his longer term Elliott wave count, he's looking at either a longer term bullback, which fits with my quarterly analysis. So I don't certainly mind that scenario if it happens. But he also mentioned the possibility where it kind of chops for a while. And that leads me back once again into that 2015, 2016, because I was already kind of cautious of that last year, that we could find ourselves in just a wider range of chop due to the price level that we're trading at on SPX versus, the 2000 price level that we were at in 2015, 2016. But still very much consolidation is what we can find ourselves on until the price starts to pick up into a trend. And if that's the case, if all we do is consolidate, I would likely, at least for the next year, once the trend move starts to happen, be looking for some sort of bullish move back to the upside. So that is what I'm looking for here. Um, yeah, I'm going to delete that. Okay. So that is about my time, guys. I didn't see any other questions come in. So thanks for joining me on this Monday market update. If I do put on any $500 challenge trades this week, whether it's an end of day pin, which is something we did a lot of last year, going into the close. That will likely be on Wednesday because of how the market usually trends that day after Fed news. So be on the lookout for that. Otherwise, though, if I don't put on one that day for the $500 challenge, because the setup's not there or anything like that, then I will be looking for those swing trades, but they probably won't happen until later in this week or potentially going into next week, depending on how that Apple's earnings goes. So, as always, my fellow Jedis, may the trade be with you, and I look forward to talking to y'all next time. Bye.